Alright, so in today's video, we're going to be doing a breakdown of the most recent FOMC meeting. This happened back on June 17th, and this was Kevin Warsh's first meeting as Fed chair after Powell's term officially ended back in May. And here's something that caught my attention right away. Powell's very last meeting back in April passed its decision in an 8-4 count, which is actually the most dissenting votes on any Fed decision since 1992. On the other hand, though, Warsh's first meeting, which is just a couple months later, passed 12-0 and was unanimous all the way around. So in this video, we are going over what actually happened at this meeting, what it tells us about where rates are headed for the rest of the year, the political backdrop that made this meeting bigger than a normal one, and what Warsh announced about overhauling how the Fed even operates going forward. So let's start with the actual decision. The Fed decided to hold the federal funds rate steady at a range of 3.5 to 3.75%. Now, this decision was basically expected by everybody, but there is an interesting story revolving around the dot plot, which is basically just the Fed's own projections of where each member thinks rates should be by the end of the year. Back in March, the median projection had rates ending in 2026 at 3.4%, which would have actually meant one 25 basis point cut from where we are now. But by this June meeting, that number had jumped up to 3.8%. The Fed is not only removing a cut from the table, but are now signaling that their next move might actually be a hike. And the reason for that flip, as we all know, is inflation. The Fed's own forecast for 2026 inflation got revised up from 2.7% to 3.6%. And core inflation, which strips out food and energy, got bumped up from 2.7% to 3.3%. Both of those numbers are way above the Fed's actual 2% target, and so while the rate itself didn't move at this meeting, the entire mood of the committee seemed to move. And part of what's driving that inflation revision is energy prices, which are tied to the conflict in the Middle East, which has been pushing oil prices around pretty much all year. The Fed's own statement specifically called out supply shocks that have driven price increases in certain sectors, including energy. So this is not a Fed that suddenly thinks the economy is overheating from too much demand. This is a Fed dealing with a supply side problem that they can't really fix or affect with interest rates anyway. And that just makes this whole situation messier than a normal inflation fight. And it's not like the committee was unanimous on this even amongst themselves behind the scenes. There was actually a survey done of former Fed officials and staff right before this meeting started. And the responses on how to approach the current situation were split. 17 said that a hike would probably be appropriate at some point this year. 14 said no increase is needed, and one person is actually still in the cut camp. So even people who used to sit in that room are not in agreement on where things should go from here, which tells us that the path forward is very uncertain. Now, there's something else from this meeting that I think deserves its own discussion, and it actually ties directly into that uncertainty that I just mentioned. In this meeting, the Fed did not just hold rates and make a shift to the dot plot. They also flat out removed forward guidance from how the Fed plans to communicate going forward. Every chair before Warsh used forward guidance as a tool to manage expectations in between meetings. Chair Powell leaned on forward guidance heavily, and Warsh basically just got rid of it. The actual policy statement released after this meeting was only about 130 words compared to over 300 words in recent meetings under Powell. Warsh said it himself in the press conference. He said that statement just gives you the facts as best as they can judge them. And he added that forward guidance was, quote, not well suited for the current policy conjuncture. And it goes even further than just the statement. Warsh actually declined to submit his own dot on the dot plot entirely. Normally, all 19 FOMC participants submitted projection, but this time there were only 18 dots because Warsh had abstained. And he said in the press conference that half the room thought rates should hold or go lower, and the other half thought higher. And he basically said that he is not going to tip his hand on which side he is on. The trade-off here, though, is that markets now have a lot less to go on heading into the next meeting than they're used to. And that is part of why you saw such a rough reaction in both stocks and bonds on the actual day of this meeting. Equity sold off hard, and yields jumped basically across the curve, especially on the shorter end. Now let's get into the political backdrop here, because this meeting was unlike any other. And I think that understanding the backstory actually explains a lot about why Warsh's first move as chair was to sound tough on inflation instead of just delivering the rate cuts everybody assumed that he would. Warsh's confirmation process basically turned into a full on proxy fight over Trump's pressure campaign against the Fed. Trump has been pushing publicly for lower rates for a long time now, and there was even a criminal investigation from the DOJ tied to Powell over the Fed's headquarters renovation costs. Senator Tillis actually blocked Warsh's confirmation for a while, specifically because that investigation into Powell was still ongoing, and only let Warsh through once the DOJ closed the probe and just referred it over to the Fed's own internal inspector general instead. So Warsh walked into this job with basically the entire financial world watching to see if he was going to act like Trump's guy, cutting rates because the president wants it, or if he is actually going to run the Fed independently. And his answer at the meeting was pretty clear. In his opening statement, he said, quote, "This committee will deliver price stability and that the recent past need not to be prologue." That, in my opinion, is Warsh basically telling everyone, don't assume I'm here to just hand out the cuts that Trump wants. And so when you put those two things together, the unanimous vote and the hawkish dot plot, I think what actually happened is that Warsh used his very first meeting to establish credibility. New Fed chairs have historically done exactly this, and that they've used their first meeting to prove that they are serious about inflation so that markets don't just assume that they're a pushover. And Citigroup actually pointed this out before the meeting even happened and highlighted that incoming chairs, they tend to use their first meeting to establish what they call their quote, hawkish bona fides. And that looks exactly like the playbook that Warsh ran. There's also a story here that I think got buried under all the rate and politics talk, which is that Warsh announced a pretty massive overhaul of how the Fed actually operates going forward. He set up multiple task forces that are set to pull in people from both inside and outside the economics profession to review what he called are the five core pillars of how the Fed functions. One of these task forces is specifically reviewing the Fed's communications, basically how they talk to the public and the markets. This is a real departure from how Powell ran things, which was a more meeting by meeting, react to the data approach. Warsh, he seems to be going for more structural, top to bottom reevaluation of the entire institution. And I think that this matters because it tells you that Warsh is not just here to make rate decisions every few weeks. He came in with an agenda to actually change how the Fed thinks about its own job. So, what does any of this actually mean for you? If you were one of the people expecting multiple rate cuts by the end of this year, which, not too long ago many people were, well, that expectation is basically evaporated. The market was pricing a hold at the June meeting at a better than 96% odds going in, so nobody was really surprised by the rate move or the lack thereof itself. What surprised people was how far the committee's own outlook shifted toward a hike instead. And practically speaking, that means borrowing costs on things like mortgages, auto loans, and credit cards are probably not coming down anytime soon. And there's a real chance that they actually could tick back up if the Fed actually follows through in a hike later this year. It also means that if you were banking on cheaper financing to make a big purchase or refinance something, you might want to rethink that timeline. There's also a wider signal here about Fed independence, which connects to a lot of the macro stuff that I cover on this channel. Warsh had every incentive politically to come in dovish and deliver what Trump was publicly asking for. But he did the opposite. And whether that holds up over his next few meetings is something worth watching very closely. There's also a market angle worth mentioning here that's a little more technical but still useful to know. Citi pointed out that meetings where a new Fed chair is running the room for the first time tend to move markets more than a typical FOMC meeting, specifically at the short end of the bond market. On average, they found that the 2-year Treasury sells off around 6 basis points during a new chair's first meeting, compared to basically being flat for a typical meeting. So even without a rate change, the market clearly treats a new chair's tone as real information that's worth repricing around. And that 2-year Treasury move is usually a pretty good real time signal of whether the market believes the hawkish talk or thinks that it's just talk. And if you guys remember, on the day of the meeting, equities and bonds had a terrible reaction. Equities had a massive losing day, and interest rates across the curve especially at the shorter end, jumped. And I mention this just because it shows that the market really does think that there is some merit to this rate hike talk. So here's where I land on this meeting overall. The rate decision itself was not important. Everybody knew that it was coming. The real story is that Kevin Warsh's first meeting as chair used a unanimous vote and a hawkish shift in the dot plot to send a clear signal that he is not walking in as anyone's puppet, despite how loud the political pressure was leading up to his confirmation. Whether that holds for his next meeting, especially if inflation data starts cooling off or if the labor market weakens, that's what I will be watching most closely going forward. A first meeting built around credibility is one thing. Staying that course once the politics get louder again is a different test. Alright guys, that's going to do it for today's video. If you found this FOMC meeting breakdown useful or interesting, drop a like, subscribe to the channel, and check out my other videos. Let me know in the comments what you guys think about the Warsh-led Fed. I'm always curious to hear from you guys. Thanks again for watching, and I will see you in the next video.